Good evening and welcome to this session of the live virtual classes conducted by the Board of Studies Academics of the Institute of Chartered Accountants of India. In the last class, we saw the various provisions relating to qualification, risk and disqualification of auditors. We also saw the basic rules for appointment of auditors. First auditor, thereafter subsequent auditors for remaining. So we found that auditors will be appointed for 5 years at a time. 5 years at a time, right? Thank you, Vishaka Goelji. Thank you very much. So now we'll see the procedure for appointment. This is more of a procedural aspect. That is, who will appoint? We have seen. What is the time limit before which appointment should be seen? We have seen. Once appointed, how long the auditor will hold office? We have seen. First auditor will hold office till the conclusion of the first AGM. Thereafter, every auditor appointed at the first AGM, thereafter, first AGM, sixth AGM, etc., will be holding office from that conclusion of that annual general meeting till the conclusion of the sixth annual appointed, he will hold office till the sixth annual general meeting. 5 years. 1, 2, 3, 4, 5, 6. Okay, sixth. Now, once the company wants to appoint a firm or an individual as an auditor, first, before appointing him, the company should obtain from the auditor a written consent. Especially, he has to confirm that he is qualified to be appointed. And very importantly, that the conditions with respect to the number of audits will not be violated. So as you saw, there is a limit of 20 audits. Now he has to confirm that this limit of 20 will not be violated. Okay. So that he can be appointed. It's a declaration given by him. It's not only a consent, it is also a declaration. So the auditor should not give any false declaration. Sure that he is maintaining the qualification, which is the membership and the holding of certificate of practice, and he is not disqualified under any of the conditions under 141(3) that we saw, right? After the appointment, the company shall inform the auditor of his or its appointment. Means they will inform of such appointment with the registrar within 15 days of the meeting in which the auditor is appointed, so that central government or the MCA will keep track of how many audits. So it is not as if an auditor can exceed the limit and get away with it, because the company will be informing. The nature of the company will be known, so that the MCA will track the ceiling, whether each auditor has got more or less. And in fact, they might even immediately take action if the 21st company is appointing, man accepts it, action may be taken, or so cause notice will be sent to the auditor. And the company also be informing that this audit will not be in accordance with the act. Appointment includes reappointment. Just like we saw, dividend includes interim dividend. Similarly, appointment includes reappointment, which means to reappointment of the same person also. So suppose the first auditor is appointed, he will hold office till the conclusion of the first AGM. He will be reappointed. For that also same procedure. For first auditor also same procedure. Before you have to obtain the consent, etc. After you have to give file. Only first auditor is appointed by the board. It's not by the members at an AGM. The subsequent auditor always at an AGM, he will hold office till the conclusion. At that AGM, he can be reappointed or some other auditor be appointed instead of him. Whatever is done, this procedure is to be complied with. As we said, while he is giving his consent, the auditor should give a certificate that the individual or the firm is eligible under the Chartered Accountants Act, thereby confirming that he is qualified. Okay. Also, the proposed appointment is as per the terms provided under the Act. That means he is not disqualified under the Act. Both qualification as well as disqualification. He should confirm that he is qualified and confirm that he is not disqualified. Okay. The proposed appointment, the minute he says the proposed appointment is as per the terms provided under the Act, he is confirming. Otherwise, I'm not disqualified. Everything is correct. The proposed appointment is within the limits laid down. That is the 20. Or any partner of the audit firm pending with respect to professional matters of conduct. See, it is quite normal that proceedings can be pending. Please understand, my dear friends, here what they are asking is not conviction or disciplinary action taken. They are asking, are there any proceedings against you? Because if proceedings have been decided and that auditor has been acquitted, no need to mention it anywhere. He has been declared to be not guilty of professional misconduct. Why should they even talk about it? Or if he is found guilty, the institute will debar him. So he cannot come here at all. He cannot confirm the point number 1 itself because institute would have debarred him from practice or suspended his COP. So there is no. So what they are asking here, what they are simply asking here is something proceeding against him now, which could result in him being debarred later. So they want the members. See, the board of directors should consciously ask, are you having any? So that tomorrow they cannot come and say, no, we were not aware that such a rogue is going to become the auditor of our company. He is already having this. We didn't know that. So the auditor has to inform, I am having disciplinary action against me. Proceedings are now pending. Okay. Then the board has to take its informed decision as to whether they want such a firm or such an auditor to be the auditor of the company. Okay. Now, I am giving this, it is not in your syllabus. Please, this is not in your syllabus. I am making my point very, very vehemently and clearly. Not in syllabus. Just for knowledge. Because the appointment of auditor is done by the selection of the auditor is done by the board. But certain companies, it is compulsory to have audit committee. Audit committee. Please don't even bother about this. Only this audit committee. 177 talks about audit committee, right? So all listed public companies and companies that are required to appoint at least 2 independent directors shall constitute the following companies. Of course, an audit committee and a nomination and remuneration for nomination of directors and fixing their remuneration. Whereas 177 is what we have to see. Under section 177, listed companies should have an audit committee. Certain categories of companies that are required to appoint at least 2 independent directors shall have. Who are they? Companies that shall have at least 2 independent directors. Not in your syllabus, just for knowledge. Just because we are going to use the word audit committee. Therefore, what is the audit committee? It is a committee for supervising the financial control, internal controls, statutory financial statement, etc. will be scrutinized and monitored by this committee. Ladies and gentlemen, will please note, this is a committee of the board. This committee cannot have members who are not already members of the board, meaning they should be directors. Only then they can become a member of this committee. So please keep that very clear in your head. Don't ask a question by which you will ask me, if can so-and-so be a member? No. President of India also cannot be. Only if he is a director, he can be. So this is a committee of the board. See, that board of directors may have 15 directors. Out of that, they will form a committee, 3 directors. Based on the rule 140, 177, they will form an audit committee. And that audit committee only will review the appointment of auditor. They will only see whether the auditor is a fit person for being appointed. Thereafter, they will recommend to the board, and the board of directors will recommend it to the shareholders in the general meeting for subsequent auditors. Okay. So just want you to be clear. So certain companies should have at least 2 independent directors. All public companies with paid up capital of 10 crore, all public companies having turnover of 100 crore, all public companies having aggregate outstanding loans, borrowings, or debentures or deposits exceeding 50 crore. So, debt exceeding 50 crore, turnover exceeding 100 crore, or paid up capital 10 crore. Or, so even if one condition is satisfied, such a company should have an audit committee. Okay. Not in your syllabus. Please, I'm again and again repeating it so that you won't get worried and ask me a question, should I remember this? But just for knowledge. Now, this may be useful to you in auditing, because in auditing it is in syllabus. In the auditing paper, this is in syllabus, very much in syllabus. Okay, audit committee and roles of audit committee. Surely it will be there. And okay, so and as you must be aware, the audit committee will only review the internal auditor appointment also, where there's an audit committee. And the statutory auditor, of course, the internal auditor will be appointed by the board, whereas the statutory auditor will be appointed by the company, the AGM every 5 years, right? So, the manner and procedure of selection and appointment. Please note it, Your Honors. Appointment will be only by the members at the general meeting, AGM. Selection and recommendation by the concerned authority, competent authority. Where a company is required to constitute an audit committee under section 177. That is why I taught you 177. Now you understand? Audit committee 177, what it is. Which companies require? All listed companies. Required to appoint two independent directors. These two categories of companies should have an audit committee. Okay. Have an audit committee. So if I come directly jump here and say a company which is required to constitute an audit committee under section 177, you can rightly ask me, what is this audit committee? What is this section 177? Therefore, to set the context only, I have given this, but not in your syllabus. Okay. Right. Now, where the company is required to constitute an audit committee, such audit committee is the competent authority. Where the company is not so required, then board of directors is the competent authority. Okay. Now relate this to CSR we studied. There also, you remember, independent director should be there in the committee, CSR committee. But where the company is not required to have independent director, board itself can do it. The directors only is enough. No need for independent director. Like that. You remember that? Similar to that. See, corporate independently. So independent directors play a very proactive and important role in enabling corporate governance. Okay. So this is one area where independent directors are to play a very, very powerful role. In fact, in Satyam scam, while we highlight to the ad nauseum, we highlight the failure of the auditing profession, we forget that the independent directors were also failed. The so-called independent directors of the so-called Satyam have also failed. Why? Because, see, before Ramaraju came out with the SEBI announcement, there was an earlier proposal by which there were two companies in the group, Satyam Group, which is called Meta's Infrastructure and Meta's Construction. These two companies were to be merged into Satyam. That proposal came before the board of directors of Satyam. Blindly, without asking questions, without understanding what they are doing, the so-called independent directors approved the proposal. Approved it. They have not even raised the question, why are you doing it? Thereafter, when the announcement was made to the public at large, the market reacted to it. The market worked it out and Satyam share fell. And many market thought leaders, they condemned Satyam for the proposal. They said this proposal is not, it is against the shareholders' interest like that, because whatever he had done fraud, he was trying to cover it up in this merger. By bringing in these assets overvalued, he was trying to readjust it in such a way that everything will, because here something happened. He had taken some money out and put it there, something that he was trying to bring back through the merger. Whatever it is, they said Meta's merger, Meta's infra, Meta's construction merger, not in good faith. Once the thought leaders and the press started hitting and the market reacted adversely, suddenly the independent directors became intelligent. Suddenly they started resigning. Shame. See, you having failed to do your duty at the board meeting, resigning, you are not protecting. You are only further damning yourself. At that time, you should continue, take the blame, and apologize and say, we made a mistake, we are sorry, we are not fit to be independent, like that. Rather, because the meeting of a company like Satyam, when a director is attending that too, these are all big people from Harvard and other universities and all, professors and emeritus professors and all. So they would be getting 200-page booklet to read while coming from US in the flight. They have to read all that. In that, he would have told you, and you should have been to do the calculation. You should have arrived at that conclusion before the market did, before the press did. So why I'm making this point is independent directors also were to be blamed. That is why when the new law came, they really stringent on independent directors. Remember, already Clause 49 is there. Already Sarbanes-Oxley is there. In spite of that, in India, the independent directors are still irresponsible. They think it as some kind of a sinecure position where they can simply sit and enjoy themselves because they've already done some IAS, they are IAS officers or government servants or some professors or some, whatever it is they are, they think they can come and sit there quietly and go. Rare exception. One of the rarest exception was our past president, T.N. Manoharan. The same Satyam, after the Satyam scam, central government formed a new board, and it was one of the nominee directors was our past president T.N. Manoharan. After he went into the board of directors of Satyam, which was he very clearly, for information, T.N. Manoharan said, we as directors are here to serve the public, to protect the public. Therefore, none of us should take any remuneration. So he insisted. He refused to take any remuneration for his services. Though independent directors are eligible to claim remuneration. They can't do anything else. There can't be any business connection, etc., etc. But they can claim remuneration. But he said no. But for the travel and all that, you bear. For my time, it is free. Then he revived Satyam. Then he valued it. And then Tech Mahindra purchased it. That is history. Please read the book. Please read the book, Tech Phoenix. Tech Phoenix. It's a good book. It is written by our past president, T.N. Manoharan. And also, from Chennai, these two gentlemen have written this book, Tech Phoenix. Kindly read the book when you get the chance, online or whatever. It will give you a lot of inputs, insights into the profession which you are now professing to admire, that you want to become a member. These two people are exemplars of that profession, epitomes. So kindly, one of them, of course, is no more with us. CAT and Manoharan was unfortunately snatched away from us last year. Therefore, you get. Okay. It will not affect your preparation in any way because this book will enhance the answers that you're writing in auditing and the answers that you're writing in law. Believe me when I say that. It will improve your answers. It will give you a better way of writing your answers for law and auditing. So no way I'm asking you to read a book that is not, it is not going to help you in your preparation. It will help you in a very, very innovative and creative way. You'll be able to prepare for the exam by reading these two books. An experience of the individual or the firm proposed to be considered for appointment as auditor, and whether such qualifications and experience are commensurate with the size and requirements of the company. So they will see what type of firm is being appointed. Do they have the skill sets? See, though technically all chartered accountants having cleared the exam are having the same knowledge, theoretically, it cannot be denied that there are members who are having experience in specific audits. Not just age-wise, in terms of having done that work. It could be even 5 years of experience. For example, a member of the institute who has got minimum 6 years or 5 years of 6 years of experience in transfer pricing is a valuable resource. She or he cannot be replaced by any other member, however knowledgeable he might be, because that particular skill they possess. So like that, the board has to decide whether this company has, this firm or auditor has the necessary professional experience and qualification commensurate with the size requirements. Commensurate means equal to. If you think this is an unnecessarily Sashi Tharu type of word, then we can use a simpler words, which is equal to. So whether such qualifications, experience are equal to the size and requirements of the company, okay, or sufficient for the size and requirements of the company. It shall mensurate or mensure means to measure. Co-mensurate means equally measurable. Okay. Relating to professional matter or conduct against the proposed auditor. So consciously the audit committee should answer this. There is a proceeding against this firm. In spite of that, we want to appoint them as the auditor. The decision should be taken. Tomorrow the audit committee cannot conveniently say, we were not aware, like that. Maybe my voice is giving a problem. Madam, book क्या है? Book is, the book of name is, इसका नाम है okay. Sir, in private companies, statutory auditor is appointed by board as per company action. Well, I don't know where Anilji gets all these ideas from. First of all, statutory auditor, other than the first auditor, all subsequent auditors, whether private company, public company, whatever, will be appointed only by the members in general meeting. Please get that. Huh? Okay, please don't ask such questions which are not correct questions to ask in a classroom. Okay, because this is not a subject for the examination. Whether there is a favoritism, etc., don't ask me. If you think there is favoritism, it is an opinion. I value your opinion, but don't ask it as a question. Please, okay. Let's not go there. This is meant as a forum for students to write the exam and clear the exam. Later on, once you become a member, please come for an institute meeting where I may be the speaker, somebody else may be there. There you can ask this type of question, and I will definitely, if necessary, I will definitely answer it there. Not here. Okay, please. But definitely ask questions that are related to the exam, that will enable you to get marks in the exam. Once you focus on that aspect, now many of these questions which are emotional and all that, you will not ask. Okay? If you have such opinions, please, I value those opinions, but I don't accept or not. I'm not saying I accept your opinion. I am saying I value your opinion, but please avoid such questions. Rather ask questions that are based on the subject, by which if the answer is given, you will get more marks in the examination. Let's go there. My comments are given as a senior member for the sake of improving your experience. So give that credit. Your age, my age, 1060. So whatever I'm saying, take it as a senior member giving you inputs. If you don't agree with me, no problem. Just like I value your opinion, you value my opinion. Leave it at that. Okay. My humble request. Now coming to the point, please understand again, the appointment of the auditor, whether private, public, blah, will be done only by the shareholders, members at the AGM. Board of Directors does not appoint the auditor. But as you rightly point out, to a great extent, they only select. That is why they have put in place a mechanism in the law to control them. The responsibility is there now to say that. Okay. It may call for such other information from the proposed auditor as it may be. Okay. Manner and procedure of selection. A company which is required to constitute, which is not required to constitute. Okay. The committee shall recommend the name of an individual or firm as auditor to the board. So the audit committee will recommend to the board. The board will recommend to the shareholders at the AGM. They will. The board shall consider and recommend an individual or firm as auditor to the members in the AGM for appointment. Okay. Now, since we are coming here in NFRA, let me sort of backhandedly answer that question. Without answering it directly, we will backhandedly answer that question. Appointment of auditors by private companies and even small, closely held public companies does not have a material influence on public interest. Does not have a material impact on public interest. Right? I'm not justifying. I'm only saying it does not have a material impact. So a company which is closely held, 70% of the shares are held by family members, 20% by certain others who are also known to each other. Private company were entirely held by one individual and his family. More like a sole proprietary run as a private company. In those cases, who you appoint as your auditor is your business. So long as you are not cheating the income tax department, which that department will take care of. GST, that department will take care of. So the union. Once the size of your company becomes, large, then there is an element need to measure the materiality of the impact. So if the auditor of such companies is not such a competent person, is not such a, shall we say, qualified person, it will impact on the accounts, financial statement, etc. There could be fraud, abusive fraud by the auditor and the management. Therefore, there is a need for oversight. That is why for materially important companies where the size is big, they have created NFRA. Remember NFRA from your earlier lecture, where we spoke about NFRA in the context of accounts. Accounting standards and auditing standards were to be prescribed by them. We also saw in that lecture that NFRA will have the power to oversee the auditors and monitor the work of the auditors. That aspect of NFRA we are now going to see. At the time of discussing accounts of companies, we have already studied which are the companies which are coming within the dominion of NFRA, which are coming within the NFRA control. We already saw this so quickly running through it. All listed companies, auditors are subject to the NFRA scrutiny. Right, sir? All unlisted public companies, okay? Public company only. Paid up capital greater than, because private company, they say you get out, we don't even bother whether you appoint auditor. You have to appoint auditor, you appoint carry, we don't care. But unlisted public company, paid up capital 500 crores. Now, there is a material impact on public interest. So we want to know who is your auditor. What is he? Is he competent? So while we trust the board, we still want to know for sure that the auditor appointment happened correctly. So basically the audit committee and board are having the primary responsibility. NFRA has the power to monitor. Suppose as favoritism, etc. is there, NFRA will come in and they will say, on what basis you appointed? How do you like that? And to an extent, the disqualification, which ensure relatives cannot be appointed, etc., will take care of favoritism. See, beyond this also, there would be an element of familiarity. You can't deny that. You can't deny the familiarity threat. You can't, shall we say, totally do away with the familiarity threat. It is, while you can attempt it, is not possible. Why? Because somewhere he will know him. See, the private company ka MD would have met this guy at his Rotary Club. Right. You would have met, Srikanth, how are you, man? Yeah. You are auditor, na? Yeah, I'm an auditor. Your firm is there. My company needs an auditor. Would you be able to handle the audit? See, that is how audits are given to people. Otherwise, how will I get this? See, then what you should do? The board should not have the right to select. Just like there is a central controller and auditor general, CAG, hai na? They are for public asset. Board cannot even discuss who will be the auditor. It is selected by the CAG from the panel of eligible auditors. Like that, there should be a panel. And that panel, from that panel, selection should be done randomly. It's okay. I'm giving an idea. Then favoritism will not be there. No? And only for 5 years. 5 years later, rotation. Again from the panel. Why not? See, this model, if you can work. Larger, the hidden question that Anilji asked will be answered. There will be no favoritism, and every chartered accountant will get an equal opportunity to be appointed, provided we can have levels of experience. So a firm with 50 years experience, this type of companies, 10 years experience, like that, like bank audit. So that more the experience, better the opportunities. More the partners, better the opportunities. Something like that, if they want, they can try. That could in a way help. This is only a broader answer on how favoritism can be taken out. Otherwise, it will be like this one. Nothing can be done. But one is a listed company or unlisted company with paid up capital 500 crore, annual turnover 1,000 crore, outstanding loans, etc. 500 crore. Special companies like insurance banking companies, companies referred by central government in special interest where some suspicion is there. All these fellows and a foreign body corporate incorporated outside India. B, D, E. A, B, C, D, E. Any of the above, if they have a foreign subsidiary, that subsidiary also will come under NFRA scrutiny. Okay, we already saw this. Therefore, this is not something new. Okay. Yeah. Now, once NFRA came into picture, the minute the act was amended to make NFRA, they said immediately, every company, see, there are two categories now, clearly demarcate, easy, black, white, like that you can say. Those that are covered by NFRA, those that are not covered by NFRA. It's a clear black and white. Either you are covered by NFRA or you are not covered by NFRA. So they say, even if you are not covered by NFRA, you will inform NFRA the particulars of the auditor on the date of commencement of the NFRA rules. So at one point in time, NFRA will have details of all auditors of all companies. Thereafter, they will decide based on the criteria whether this company will come under NFRA or not. Okay. So the form within 15 days, okay, of appointment, they should audit. Thereafter, okay, those companies, thereafter, see, first stage, on the date of commencement, every company, including non-NFRA company, should inform once. Okay. Thereafter, every time you appoint or reappoint an auditor, if you are NFRA covered company, then within 15 days of appointment, you have to I'm pronouncing NFRA, so please don't think that there's a vowel in between. I'm only pronouncing it as NFRA. If you don't want that, if you don't like that, you can continue to call it NFRA. NFRA. Okay, it's your choice. I'm using NFRA, but if you think that is wrong, then you can use the word NFRA, which is a clear sort of, shall we say, abbreviation or sort of, what is it? Acronym. It's not an acronym, it's an abbreviation, NFRA. But I'm trying to make it into like our, Prime Minister loves to make words out of, the first letters of something so that he gets beautiful words out of it. Like that. Anyway, in NFRA, there is a national. I'm taking that A and putting it in small, thereby pronouncing NFRA. Okay, like National Financial Reporting Authority. Now, quickly, there's a small part of your syllabus, institute material, that is there at the end. Before cost audit, you will find this because institute is going in the institute material is in the section order. Therefore, since this is not in that order, whereas I am covering it here because it is part of appointment. Are you able to understand why I am putting it here? Because once you appoint under 139(1), NFRA company, you have to file NFRA 1. Right. While we are doing that, let us also look at the NFRA's power vis-a-vis auditor. NFRA and auditor. Okay, I'm covering that here. So, NFRA, there's a rules are there. National Financial Reporting Authority Rules 2018. There are many rules. You need not know the rules fully. Whatever rule is covered here by me is in the institute material. Try to remember. But what is the content, sum and substance? Try to remember. NFRA has got power for what? To monitor and enforce compliance with auditing standards. Friends, there's a dual control, whether we like it or not. Yes, primarily I'm reportable, bound to my institute. I'm answerable to my institute. My institute itself has the power to call me and ask, what are you doing? In addition to that, if I'm auditing a listed company or any of these companies, then NFRA can also call me, or the firm. They will obviously, when they call the firm, the partner who signed the audit report has to go. Because at the end of a statutory audit, what am I doing? I'm forming an opinion. That's all. How did I form that opinion? How did I come to that opinion? Based on the numbers given in the balance sheet, the information and explanations provided to me, the books and papers verified by me. This is called audit documentation. What did I see? What did I understand? What did I inquire? What reply I got? Was I satisfied? Or did I make further inquiry? Did I get all the records? Have I satisfied myself that the figure stated in the balance sheet is correct or as far as possible true and fair? Or have I verified with third party evidence? Have I verified with except? So this is what is basically statutory audit. Okay, so you have to be very thorough in how you arrived at your opinion. Every number. 3 years almost with a firm called Pricewaterhouse, not PricewaterhouseCoopers. At that time, it was Pricewaterhouse. Believe me, that is audit documentation. What we did in 90s, 80s and late 80s and 90s, that is audit documentation. Today, of course, you have audit software, blah, blah. That day, an audit manager will write pages and pages of notes, audit notes. Believe me, we used to do it so that even if I'm quitting the job and going, arrive at the opinion. At the end of the top sheet, these numbers are tallied. These numbers are correct. Like that, 3 audit managers, a team of 4 people, a battalion would go there, completely audit the balance sheet, P&L, etc., and audit notes. And finally, the partner would review and satisfy himself that everything has correctly verified. And then, once the opinion is formed, they will say, see why I'm giving this example. If you understand this now, if you do this correctly now, you need not worry about NFRA. NFRA is not some books that you come and if you have done the job well, why are you worried? If your documentation is clean, if your working papers are available and you can show it, happy, just show it. Okay, but again, the compliance with audit standards should not be simply a matter of creating paper and keeping. No, it should be a conscious decision-making process. But come to the conclusion. So that if a third party goes through my audit working paper, he should be able to form their opinion based on the working paper. If you are able to put your working papers to that stringent quality measure, then NFRA can do nothing to you. Because going through the working paper, NFRA also has to come to the same conclusion that you derived. So you have reported it. What is your problem? If the board of directors has done something wrong, you have reported it. What is the problem there? So honest man, but if it is just going to be a matter of clerical and administrative pinpointing errors and all, that is the waste extent. But if the opinion was derived based on documents which were seen, recorded, then what is the problem? Anyway, because at the NFRA level, it won't be just procedural or clerical documentation. It will be how did you form? You are saying debtors are recoverable. How did you form that opinion? Have you got confirmation from debtors? Proof. Show. So there will be a file. If not a physical file, a PDF or a scanned image will be there. Or digitally signed could have been obtained from the debtors. Confirm of balances. Creditors confirmation of balances. So on and so forth. Anyway, sorry to go into auditing, but that is exactly an intelligent student studying first group should also study audit together. That is why both groups writing makes a lot of sense. So that many overlapping topics in your brain will adapt. And you can write both the papers. By using knowledge of this paper, you write that. This paper, you write this. Okay. So review the working papers, including audit plan and other audit documents. So NFRA can come and now review your working papers. Okay. And also the communication related to the audit. See, in Enron, many of the interviews taken by the partners and other employees, which were adverse to Enron, were destroyed by the partners. Or in the process of being destroyed, when the SEC came and caught them. And then the partners were taken through a rigorous questioning process and they confessed that they have there were incriminating material against Enron, which was there in the audit firm's audit papers, which were destroyed. So that is a type of Satyam. Satyam is a different story. It is either it is a clear case of professional misconduct, professional negligence. Okay. See, you are saying that fixed deposits you have verified. How did you verify? You got confirmation from the bank. Did you write directly to the bank and get it? Did the bank send you independent confirmation, or did you take it from the client? If any information that the client provides is suspect, the assumption should be that the client is a fraud. In the sense, client has some axe to grind. So any information given by him, keep on one side. Third party is better than client. This opinion is there, then no problem. We will not suspect the clients. In fact, once one client he told me, Mr. Srikanth, you have to believe me. I said, sir, I believe in God. Rest of you I audit. I am not paid to believe. I am paid to verify. So please give me the proof, then we will talk. Or give me the probability of the case. Right, you don't have proof. But how did it occur? How did this expense you incurred for what purpose? What is the benefit derived by the company? Like that. Okay. Evaluate. Okay. I'm sorry. Okay. Evaluate the sufficiency of the quality control system of the auditor and the manner of documentation of the system by the auditor. See, Caesar's wife should be above reproach. Justice should be done. It should also be seen to be done. Audit should have been conducted, but it should also be proof. There should be proof that it was conducted the way you say. Perform such other testing of the audit supervisory and quality control procedures of the auditor. This will be considered necessary. Now, if you ask me, is such a provision draconian? Is it anti-auditors? No. I think we need this. Our behavior has also been equal, that it invited this. Okay. The trust that the society had on us, a few of our members have betrayed. So all of us have to now go through the NFRA process. There's no other way. We invited this trust. Some of us, due to the greed, okay, they did certain things, throwing a doubt about the entire profession. Nothing wrong. It is to us now to prove ourselves, our chastity, and say, yes, we are clean. Come see, come and verify. Do whatever you can. See how clean we are. Like that. That challenge we have to take up, rather than say that NFRA is not to come and all that. Okay. And we have to be very, very careful. I can tell you some examples of how bankers themselves will induce an auditor to give false certificates. I'm not joking. Once, when the banker comes to me, especially the business side of banking, they will come to us because they want to make the loan, but there are certain problems. They will say, you change the balance sheet and give it to me. I said, what are you talking? What are you talking? Which age? Which century are you in? Sir, no, Mr. Srikanth, just only for the purpose of our bank purpose. Like, what nonsense bank purpose? There is one balance sheet, ICAI balance sheet. Common, everybody sees the same. I can't give you one. So the bankers will talk like that. And thereafter, the same bank, 3 years later, will go to NFRA and say, this man gave a false certificate like that. So be very, very careful. Okay. Require an auditor to report on its governance practices and internal processes. Okay. And designed to promote audit quality, protect its reputation, and reduce risks, including risk of failure of the auditor, and may take such action on the report as may be necessary. They can seek additional information, personal presence of the auditor for seeking additional information. That is literally summon him. Okay. Send a separate report containing proprietary or confidential information to the central government. Friends, this is an extreme step. That is, for all this inquiry of the auditor, blah, 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 they find that there is a collusive fraud. They find that the company's affairs have been mismanaged. The auditors have not reported the mismanagement. They have done some hiding. This is coming clearly out of the documentation. Now, see, the problem here is by which I cannot disclose confidential information about the client to other parties. Normally. Okay? Exception, a government department asking for information within the statutory framework, I have to give. I have to give, of course, a disclaimer that I'm doing it only for the purpose of compliance with the section or rule as the case may be. Then I'm allowed to give. Okay. So send a report. But this can happen only if the central government, if the NFRA comes to the conclusion that there is a collusive, deeply laid fraud, only then they'll go here. Just like that, they won't send all the details to the central government. But if there is a deeply laid fraud or something very bad is happening, then NFRA will send a report to the central government. There is the MCA. The central government here means MCA for necessary action, which could include investigation, serious fraud investigation, whatever. So NFRA would start the process of SFIO, which you will see later on when you come to final, maybe when you're reading on your own self-paced module, you will come across. Where the NFRA finds or has reason to believe that any law or other professional or other standard has or may have been violated, it may decide on further course of investigation or enforcement action through its concerned division. Okay, SFIO also comes under MCO, the Serious Fraud Investigation Office. Very not relevant for you, syllabus-wise. So NFRA shall perform its monitoring and enforcement through its officers or experts. It will publish its findings relating to non-compliance on its website, unless it has reasons not to do so in the public interest. But let us not forget that this part of NFRA's work, review working papers, etc., cannot be done by a non-member. Sorry to make this comment. I don't know how the NFRA will interpret my statement, but a person who has not gone through the institute's rigorous procedure for membership cannot do a verification of what has been done by a member, in the same way that a non-doctor cannot review whether a doctor is guilty of medical negligence. A government servant cannot decide whether I have been negligent as a professional, whereas a co-professional can. That's why we have peer review. So a co-professional who has similar experience, similar knowledge, definitely he can come and review what I have done. But a non-member cannot comment, should not come. See, generally you might comment, you might have knowledge, but you are not an expert. Member of the institute only is an expert. Okay, this is something I'm insisting because, see, think about it. If medical negligence, only doctor can tell, because he would have gone through similar procedure, what he would have done, whether that was being done by this gentleman. Look at the video, correct? He has taken the suture correctly, he has done, he has inserted everything. Whatever he has done is correct. There is no negligence. But due to some problem with the patient, there is an avoidable bleeding or something that he has done his best to staunch it. He has done his best, but beyond control, it has happened. So they will decide no negligence, pure accident or pure on the operating table, anything can happen, it happened. Negligence is not there. It's why I'm making this deep medical comparison. Similarly, you have to see whether negligence was there. And that can be decided only by another professional who would have done similar audit. Okay, this is something, and I'm making it as my own view and comment, not to be not to view official, but I think that is a view I can have. Okay, 40 years of experience later, another person who's not just qualified as a BCom or MCom cannot come and tell me how to audit, because I have done it practically. So that practical, not necessarily 40 years, at least 10, 20 years practitioner can come and he can look at it and say, what, sir? Only we have to do this as per SAP, so no, sir, what do you know? Yeah, they can talk to him. Yes, boss, what you're saying is right. Or no, SAP is there now, but look at this, I've done it now. So there can be a meaningful professional conversation between us. That's the point. Okay. So that is why they say NFRA can perform this through officers or experts with sufficient experience in audit of the relevant industry. So if there could be officers of NFRA who are members of the institute, could be. They could hire members who would have experience. They could definitely. They could have. That is not a problem. For information, the Controller and Auditor General employs auditors, general accountants. The whole battalion of CAs are there, highly experts in SAP and ICAI. Opportunity to conduct seminars for the CAG's auditors and on accounting standards in those days. And 3-day seminar and all I used to conduct. Complete. At that time, only 24 was there. After 24, nothing. Only up to 24. Then only all the rest of it. 26 and all came much later. So up to 24, I used to take 3 days. Myself and a team of teachers would go chartered accountants. And we would, so it would be more like we wouldn't teach them. We would give them a briefing on this, then a case study, or they would bring a case study and discuss that and try to come out with what should have been done, how the qualification should have been given, like that. Okay. So they can have, and also they publish their findings on non-compliance on website. Okay. Unless, some information they need not do so in the public interest. NFRA shall not publish proprietary or confidential information unless it has reasons to do so in the public interest, and it records the reasons in writing. Of course, believe me, it is not, this rule can easily be, you can go to the High Court or Supreme Court and get an injunction against NFRA. See, the Constitution protects you. Suppose they are going to disclose something that is not correct out of venomous or spite, then you can go to the High Court and get an order of injunction, or Supreme Court, as the case may be, depending on the level, and you can insist that it should not be published. So don't think that you have to just keep quiet and sit and watch. We can engage lawyers to fight and win for us, constitutional lawyers. Is also empowered to oversee the quality of service and suggest measures for improvement. If they see a standard, lacuna or lapse in the entire audit process by all firms or majority of firms, they can insist on new set of rules, amendment to the SAP, whatever. Direct an auditor to make measures for improvement. Then the auditor should do that and confirm complaints to NFRA. NFRA will monitor whether that improvement has actually been done. NFRA may also refer cases to Quality Review Board of ICAI. Finally, see, when it becomes so confusion and professional, they can't have it. So they can say, boss, we knew. From now on, this is a 100% professional matter. You better go to your own QRB. They will send a, shall we say, direction to the QRB to go into this matter and report. Nothing wrong. They can take assistance of experts. Expert here is CAs, because only another professional only can monitor professional. This is, I think we have to maintain this dignity. And so otherwise, Tom, Dick and Harry can come and ask question. I cannot explain to him. It is expert point. How can I explain? You understand? Are you not listening to what I'm saying? NFRA will not appoint the auditor. NFRA will not appoint the auditor. Auditor appointment will be by the board, audit committee, members. That for all companies. It will be done only by the company in general meeting. Only exception, government company, CAG will appoint. Other than that, non-government company members only will appoint based on recommendation of board. Where there is an audit committee will recommend to the board. Please hold on to this thought. NFRA will only monitor how the auditor is operating. Once the auditor is appointed, the company has to inform the NFRA. So-and-so has been appointed. Thereafter, NFRA can call for quality improvement. Please try to hold on to certain simple thoughts about the subject. No, while reviewing why they will appoint the auditor, while reviewing already appointed auditor, there is that you have to somehow understand the subject well, and questions will become meaningful. So, NFRA has no power to appoint anybody. Okay. Already appointed man, they can monitor his work. Okay, there's a difference. Who will appoint NFRA? That's a good question. NFRA is not appointed. It is constituted. In the last lecture on accounting, I showed you the authority will be constituted. There will be a chairperson. You go through the PDF PowerPoint of the last lecture where I clearly showed the government, the central government, the Ministry of Corporate Affairs will constitute the NFRA. The NFRA will consist of, we saw that, chairperson and members. They will all be selected from the pool of available resources. They will call for applications, member of NFRA application. So IAS officers would apply, or an IAS officer may be appointed across. Maybe he's in the Ministry of Finance, he'll come here, or he's in the Ministry of Corporate Affairs, he'll come here. He'll be appointed in this as a member, for which he'll get salary and all that. Chairperson. Members of the institute also will be invited. They'll be given an opportunity to apply. Then based on their experience and evaluation, they will be appointed. So it will be the Ministry of Corporate Affairs which appoints the NFRA. There will be a certain balance. There will be civil servants, experts in finance and auditing, chartered accountants in practice. Go and find. Maybe senior chartered accountants will come. Thereafter, they cannot be a partner of any firm. They have to quit and come. And thereafter also, they can use all that. We saw all that in last lecture. Please just refer to those PowerPoint. You will see that everything. The institute material also is there. You can read it. How NFRA is to be constituted. So NFRA is a body. It is not appointed. It is constituted. Members are appointed. They are appointed by the ministry. Okay. Right. Beautiful, sir. So we have gone through NFRA. I don't know how they will ask in the exam. It could even be like a type of theory question disguised as problem. They could say that, so first of all, they ask you whether this company will come under NFRA itself. So you have to be thorough with this. Once it is done, they will ask what are the powers of NFRA to monitor. Then you can write A, B, C, D, etc. Okay, good. So sometimes, when I'm answering, I might become a little emotional. Don't get that. The idea is not. My only concern is that you should not get things wrong. So for the removal of doubt once and for all, auditor of a company is appointed. First auditor is appointed by the board. Subsequent auditors are appointed by the company in AGM. But the name of the auditor is selected by the audit committee, if there is one, or the board, and recommended by the board by just the name of the auditor, and the members will appoint that auditor. Suppose they want to appoint some other auditor, there is a provision for that. We'll see that. Okay. But 99.9% board will only recommend, members will appoint at the AGM for 5 years. Okay. Please don't have any confusion. Role of NFRA is not to appoint auditor. It is only to evaluate the performance of the auditor. Only for those companies to which NFRA apply. All and sundry company, NFRA will not be able to control. Only these companies, NFRA rules are applicable. These companies whose auditor is appointed by the company or board, as the case may be, they have to inform NFRA in Form NFRA 1. That is all, my dear friends. There's no need for you to get confused at all. Okay. So, auditor of such classes of companies will also file a return in NFRA 2 on or before 30th November in every year. So, if that auditor is auditing such companies, then he has to confirm. The NFRA 2 is basically to show that they are having the necessary infrastructure, certification, etc. For example, if you want to be an auditor for a public sector bank or for a listed company, etc., you should be a peer-reviewed firm. The firm should be a peer-reviewed firm. So whether the peer review is available, all that they have to confirm to the firm. So it's more like a checkboxes. Once NFRA is satisfied, all checkboxes are ticked, mostly they will let go. But if NFRA gets a complaint from a shareholder or from an investor group that this company, some Golmaal auditor is also involved, then they will start asking all sorts of details. Okay, that is when the power will come. Okay, so term of auditor, how long? We already saw this, but just for clarity, listed companies and other prescribed class or classes of companies, except 1% companies and small companies, shall not appoint or reappoint an individual as auditor for more than one term of 5 consecutive years. So, individual can be appointed by listed companies and certain other prescribed class of, we'll see that, class of companies only for 5 years. After 5 years, another rotation of auditor, another auditor should be appointed. But this is not applicable to all companies. See, if you are not coming under this category, if you are not listed or prescribed company, then such company can appoint auditor. 100 years of the same man can be audited. I'm not joking. We have clients for whom our firm is 50 years old now. We have been auditors for 40 years. Okay. They are appointing us and we are continuing. Okay. So don't ask me whether this is right or wrong, Mr. Anil. It is how it is. Okay. That is unfortunate. For if you think if you are feeling bad, I'm sorry. But they'll appoint me. If I tell them I'm going, they'll go mad. There's a no Srikanth. You be the auditor. Okay. It is based on the quality of the service, the integrity of the professional, the support that we have given them over so many years. That makes them retain. It's as simple as that. So don't think that. But for listed companies, individual, for an audit firm, it is 2 terms of 5 consecutive years. Ladies and gentlemen will note, it is not 10 years. It is not when you appoint him, you can say 10 years. No, you appoint him initially for next 5 years. At the end of that 5th year at that AGM, you can again appoint the firm for another 5 years. Firm can be reappointed after 5 years for another 5 years. 2 terms of 5 consecutive years. Consecutive years means coming one after the other. Sequentially coming one after the other. So 5 consecutive years. So 26. Let us say that your firm has been appointed 26 AGM. So you will start from the conclusion of that AGM. 26 AGM will start. Okay. And you will hold office. You will hold office 5 years. 27, 28, 29, 30, 31. So in 2031, Hannah, your AGM, 5th AGM, you will be appointed for another 5 years. The firm will be appointed. But if it's an individual, Kadam. Some other person only has to be appointed. This is called term of auditor. Normally, you are appointed for 5 years at a time. But for listed companies and certain prescribed class of companies, you cannot be appointed for more than 5 years if you are an individual, or more than 2 consecutive terms. 2 terms of 5 consecutive years. 2 terms. Okay. This was introduced in the new law. When 2013 the law came, it came as a rude shock for auditors. In fact, that made the new law very unpopular for us, because overnight, companies where we have been coolly sitting as auditors for 10 years, 15 years, we have to now change. They have to change us and bring a new firm. It's a nightmare on Elm Street for all of us, but somehow we came through it. And so all unlisted public companies having paid up share capital of 10 crores or more, all private limited companies having paid up share capital of 50 crore or more, all companies having paid up share capital of below threshold limit mentioned in A and B above, but having public borrowings from financial institution, banks, or public deposits of 50 crore or more. So these categories also, there will be rotation of auditor. So this provision is known as rotation of auditor. Rotation means the same auditor cannot be reappointed after 5 years or 2 consecutive terms of 5 years, as the case may be. It should be rotated. Another auditor should be coming. Okay. After all, of course, that next firm can be appointed for 5 years, and again you can have this people back. No problem. So you can keep circling. Right. So an individual auditor who has completed his term of 5 consecutive years shall not be eligible for reappointment as auditor in the same company for 6 years. Similarly, an audit firm which has completed its term, that is 2 terms of 5 consecutive years, shall not be eligible for reappointment as auditor in the same company for 5 years from the completion of such term. So the firm was auditor for 5 years, 2031. Firm, again you can reappoint. So 32, 33, 34, 35, 36. Now in 2036, 5 years over, cooling period is over, you can come. So this is called cooling off period. Cooling off period. They think it's like this. No, he has been running, hot. So you wait 5 years, you cool. So you make him sit in the shade. You wait, don't come. Let somebody else run. Okay, like that's what it means. Cooling off. Okay, right? Now, so please understand. An audit firm having a common partner or partners to the other audit firm whose tenure has expired in a company immediately preceding the financial year shall not be appointed as auditor of the same company for a period of 5 years. Simple, sir. We'll see an example, you will understand this easily. Common partners are there. So one firm has tenure has expired, then the other firm with the common partner cannot be appointed because that will be easy enough. See, Srikanth is partner, Kapagam Krishna and Natarajan. I also form another firm, Ram and Rahim, whatever. Srikanth, Ram and Robert, Rahim and Robert. Then that firm I'm the common. Now, Kapagam Krishna Natarajan, 5 years over, another 5 years, 10 years over. Next 5 years, you appoint Rahim and Robert, Srikanth, Rahim and Robert. They cannot appoint. Why? Because common partner Srikanth is there. Got it? Similar. This is example is similar. Ram, Rahim, Robert and Co. is a firm of chartered accountants with 3 partners. Ram, Rahim and Robert. Robert is a common partner in Robert Associates and LLP. So there is Ram, Rahim and Robert and Co. Ram, Rahim, Robert and Co. There's one more firm, LLP, called Robert Associates. Robert is a common partner. Now, Ram, Rahim, Robert and Co. was appointed as auditor in the company Rainbow Detergents Limited for 2 consecutive periods of 5 years. Very good. From 2016 to 26. Okay. Now, 16 means 17, 18, 19, 20, 26. And, that should be more than that. No? 27, 28, 29, 30, 31. Actually, it should be 31. 2016, 2 consecutive period means 2031. Sorry, I'll just correct it now itself. If it is to be 2 consecutive period, it is 31. Correct. 2 consecutive, 10 years. 11th year. 16, he is appointed. Then 17, 18, 19, 20, 21. Again, another 5 years. 22, 23, 24, 25. 26. Correct. That is correct. What I have given is correct. Sorry. No, that is this year. 26. 26 is this year. Okay. Now, but then, wait a minute. When little bit later, we will see there was an extension was given. We will see that some arithmetic will have to be done. Don't worry, I will teach you. It's not, it is not some rocket science. We'll see that. Don't worry. And so they were appointed for 2 consecutive periods of 2016, 2026. Now the company wants to appoint Robert as its auditor. Can they do so? No. Why? Because this is the answer. According to section 139(2), a firm of auditors shall not be appointed for more than 2 consecutive in the same company for 2 consecutive periods of 5 years. Okay. 2 terms of 5 consecutive years. Okay. Thereafter, they cannot be appointed for another 5 years. Now, in this case, and you can also write this, where there's a common partner, then the other audit firm, okay, can also not be appointed. Okay. So therefore, since Robert is a common partner, Robert Associates cannot be appointed as the auditor. Are you clear? See, after the cooling period, which will be again 27, 28, 29, 30, 31, how does it matter Robert Associates? You can as well appoint Ram, Rahim, Robert themselves. Robert Associates can, after 5 years, no problem. Why Robert? As well you appoint your own good old Ram, Rahim, Robert. They are themselves eligible after 5 years. Once the cooling off period is over, the old auditor can again be called. See, this nightmare happened for many of my auditees in 2017. Okay, when 14 law came, they gave 3 years, shall we say, grace period. So in many companies, we have been auditor for 25 years, 30 years and all. So the 3-year grace period was there. So they're waiting. We told boss 3 years, I'll be auditor after that. By what are you telling? Srikanth, without you, what do you do? 2, that is the law. Go and ask the Ministry of Corporate Affairs like that. I was joking. Then they said, do something, man. You continue. So that will be done. We will continue. We will be advising them. We'll be doing so many other services. But statutory audit alone will be done by another firm and all. And then exactly on the expiry of the 5 years, that MD will call, Srikanth, 5 years over, come, you are again appointed. So why I'm telling this, yes, familiarity threat is there. But it could also work favorably. Because once we know that company now, we will advise them well and we will audit it better. But still, for certain certain size of companies, there is an element of public interest. Therefore, since the suspicion is there, same man is auditor, no, then you as well satisfy the public size by changing the auditor, bringing new. Okay. So, anyways, new firm can be for 10 years. 10 years is a pretty long time, yeah. We can become familiar in 10 years, no problem. So if you really want to beat the familiarity, do what I said. No director should be able to select auditor. It will be done by a panel, by the central government, from the panel. Depending on commensurate with size and age and all, they will select firms. So firms will be categorized, etc., etc. That will also lead to consolidation of firms in our country. See, today we have so many chota proprietary firms. What we need is consolidated firms. We should reduce the number by at least 30-40%, so that all these firms should consolidate and become big firms. Only then the Indian multinational firm will emerge in India. So long as each auditor is having some 100 files, 200 files, small satrapies, earning decently, but not, you will not have that big client which can compete with the big four. That's going to be very difficult. Whereas consolidation happens, yes, then the panel will decide who will be the auditor. This is the broader thought. Since you are all asking such questions, I'm giving my view. After cooling period can be appointed 1 term or 2 term. Madam, after cooling period, again back. No. So if you are a firm, 2 years. Please note, firm only 2 consecutive periods, whereas individual only 5. 1 term. But okay, I'll give a simple example. ABC and Co is the auditor. They have been appointed for 2 consecutive periods. Over, no cooling off period, 5 years. Some other firm will be appointed. The expiry of the cooling off period, again AB and Co can be appointed for 2 terms of 5 years. 2 consecutive terms of 5 years. 5 consecutive years. I hope I have answered that question, madam. Karanji? Okay. No problem. Those questions are relevant. Why? Because you are having a genuine doubt. And that has to be, I hope, amply clarified for you. See, this topic is my bread and butter. Last 40 years, my bua has come from this practice of the profession of accountancy, statutory audit, tax audit, etc., etc. In fact, many people will ask, Mr. Srikanth, are you specializing? No, my specialization is generalization. Like that I used to say. I do audits, tax audit, statutory audit, GST consulting, tax, corporate law consulting. Okay, I'm like a general practitioner. You come to me, head to foot, I will see. The minute I see something that is arousing my fear about something, immediately I will call the correct, I will direct you to the expert for that alone. Thereafter, I will take care of. If it's a matter of just prescribing your diabetes medicines and your BP medicine, I will take care. Don't worry. And up to a certain level, I will take care of your health and I will give you proper, good treatment, keep you healthy. But certain extraordinary things, my expertise is not there, no problem. I will tell you which expert to go and what to do. And advise that expert also, sir, I'm sending this patient, Swallow has got this problem, go through that and do something. That much expert, I will give him input. So this is one type of a role, nothing shameful about it. And that role can be very effectively played by a good practitioner. Nothing wrong that everybody should not specialize in one area. I have no specialization. See, if you take transfer pricing, I know. If you want whatever you call it, I know. Okay, the double taxation avoidance agreements, I know. At a very, very compliance rudimentary level, I can do everything. But the minute you get into dispute in TP, then that appropriate expert will come. Okay. So why I make this comment is not relevant for syllabus, but to give you a broader idea. Many people think specialization is something great. I humbly submit that in practice, if you want to earn money and grow, specialization is a danger because you'll be caught in niche and you cannot really expand and earn. So you will be caught unless your specialization should be so hot and so permanent niche. That's rare. There are only a few, and there only 2 or 3 experts can be there. That one niche. If 200 people go there, it is no longer a specialization. It is no longer a special. If 200 people are doing the same forensic audit, if everybody goes, then out of the 200, 3 will emerge. Who would be the ultimate authority in that field? Those 3 only will earn 80% of the income. The remaining also ranks will earn nothing in that specialization. Whereas those 3 will earn 60 to 75% of that income in that specialization will go to these 3 or maximum 10. Okay. So what I'm telling is all practical. So don't get angry with me for telling this. But the problem is people think, they outsource their thinking. They outsource. They come to me and ask, Mr. Srikanth, you tell me what is the best specialization today. They are outsourcing their thinking to me. So if I tell what is the use, you have to find out. You go study the market. You find out. For that, I can tell you, this seems to be relevant, but don't take it as Srikanth. Just take those inputs and then work on it. Do some study, see, and then you decide. And you also take this input from a senior practitioner. Don't specialize. Be a generalist. Be aware of everything. Serve your clients overall. You might ask me, are you talking nonsense, Mr. Srikanth? Everybody is telling specialize. Why are you doing this? In fact, today in the B schools, they are talking about, just to quickly share this thought with you. It's a very interesting thought. They are talking about, I'm so sorry. This is actually a symbol called pi. You see, not pi. This is called pi. So earlier they wanted T-shaped individuals. T-shaped. That means the broad knowledge will be there in everything. But he'll have good expertise in one field. T-shaped individuals. Okay. So specialization will be there in one field, but he will have good knowledge everywhere. That's what they call T-shaped individuals. Whereas today they are called pi-shaped individuals. That means wide knowledge everywhere and specialized knowledge in at least 2 disciplines, not one. Because of if you have only one specialization, that specialization is destroyed by some change in the law or change in the environment. Then where are you? So they say have 2. In fact, in my case, I was a pi-shaped individual in 1997 because my practice was there. So as a CA, one expertise leg was there. The other leg was corporate training, where I specialized in HR and corporate training, where I had 2 legs. So I can dance. I can be wherever. Corona taught this lesson to people who had only one source of income. Corona taught the lesson. I wish we had other source of income like that. Corona taught that lesson, but they learned it a little too late. 97. Many of us were pi-shaped as early as 90s. We had 2 areas where we were, not one. Okay. So this is a similar question, a little more elaborate. Okay. Question from the examination. Lemon & Company Chartered Accountants, a limited liability partnership firm with CAM and CAN as partners, is the statutory auditor of a listed company, Big Limited, for past 6 years. That's on 1/4/2021. Don't worry about the dates. If you want to change it to 26, you'll feel happy. Mentally do it. Feel happy, change this to 26, be happy. Okay. But the principle is more important. They have been 6 years. So this is the year. Now, M is also a partner in another firm, Dew and Company. Okay, Dew and Company. Now, what you do, if you are going to give answers, please mention 1, 2, 3, 4. 1 answer, 2 answer, 3 answer, 4 answer. Up to how many years can Lemon & Company continue as statutory auditors of Messrs. Big Limited? So now they are in 6th year. So this year they have to be either somebody else has to come or reappointed. So up to how many years can Lemon & Company continue as statutory auditors? What shall be the cooling period for Lemon with respect to Messrs. Big Limited? Okay. Can Dew and Company be appointed as statutory auditor of Big Limited and is another listed subsidiary, Dark? So first you say how many years. Thereafter, at the end of that period, okay, what should be the cooling off period? During the cooling off period, can you appoint dual company? The question is dual. Can you appoint in big and can you appoint in its subsidiary dark? Can Lemon and Company be appointed as internal auditors of Big Limited? Internal auditors. And it's another listed subsidiary dark during such cooling off period. This is a question asked in the examination. Now, what we will do, my dear friends, this is a large question. It will need your application and typing and all that. So I will leave you to enjoy it for the next 10 years. Sorry, 10 years is only for fun. Now. That my mind is still in 10 years of it. So 10 minutes when we can have a break. Post the break, I would go through your answers, which are there in the chat box, and we will see what is the correct answer, etc., etc. Sir, small break, sir. G, small break. G, small break.
Okay, sir.
And hopefully many of you have, almost 8 responses here. Let me see. I will take Sushmita ji's answer because she has given in 1, 2, 3, 4. Huh? So let me see. And based on that, I will see the others also. One, 4 more years. That is still financial year ending 31/3/2025. Beautifully said. Beautifully said. Because first period of 5 years, now they are in the second period. So 6, 7, 8, 9, 10. Correct. Beautifully made. That is a correct answer. Cooling off period of 5 years till financial ending 31/3/2030. As you are saying 21, 22, 23, 24, 25. Then 26, 27, 28, 29, 30. Beautiful. Excellent. Correct answer. Now, a company cannot be appointed in big limited. Why? Because they have common partner. You know that. The reason is they have common partner. Correct? However, yes, there is no prohibition for appointing in subsidiary. The prohibition of not appointing as statutory auditor is can be appointed. Very correctly answered. Beautiful, beautiful, beautiful. So happy. One sec. Just give me 1 minute. Yes. Now, lastly, let me read Shushmita's last answer. Yes, Lemon and Company. This whole cooling off thing is only for statutory audit, not for internal audit. So, Lemon and Company can be appointed as internal auditor of Big Limited and also this. Okay. Beautiful. Vishaka Goyal also gives the correct answer. She gives the dates and also she gives for third, no, but for subsidiary, yes. For fourth, she gives yes, which is correct. Vishaka Goyal also has given correct answer. And Nikunj Vijay Doshi also has given correct answer for 1. For Vishaka Goyal, finally she gives the more accurate answer later. Gayatri ji also 4 more years, 5 years. Beautiful. No due and company cannot be appointed because she mentions that yes, can be appointed as internal auditor, but third one, she doesn't talk about dark limited. So the dark limited they can be appointed. That she could have written. For another 4 years, Lemon Company can continue. Beautiful. Kash also gives the correct one. Beautiful. Vijay Doshi again gives the correct answer, for which we thank him. Beautiful. So this is a comprehensive problem which covers thing. I hope that would have cleared any of your doubts. Here is a different problem. Number of partners and 20. It's a simple arithmetic. A, B, and C. 3 partners. So they are already holding 4, 6, and 10. Now, what is the maximum number of audits remaining in the name of ABC and Co? Now, ABC and Co, it is 20, 20, 20, 60 audits. 20, 20, 20, not 2020. That is a cricket match. This is 20, 20, 20. So A20, B20, C20. Now, totally they can do 60. Totally they have got 20. That means another 40 audits they can take of that category. Exempted category, you need not include private company, OPC. Eligible companies you take. In those companies, there they can get another 40. But remember, it is not 40. It is sublimit is there. So each partner has 20, 20, 20. In that sense, A, another 16. Am I correct? 20 minus 4. B, 14. C, 10. So that way 40. There again, you have to divide. The partners also have sublimits. Correct? Beautiful. Vijay Joshi gives us 40 for ABC and Co. 16, 14, 10. 20, 20, 20. 16, 14, 10. Beautiful. Beautiful. Excellent. This is a very simple problem. There is, I'm so happy that you are able to give that. Kashish also gives us the answer. Thank you, sir. Beautiful, beautiful. Now, this is that period thing. Friends, I suggest you don't break your head with this. You will find that there is one diagram and all, there is one calculation and all that. Don't break your head on that. I will explain to you in simple terms, Mark. The law was passed in 2013 was. So, they said, 13 it came, 14 AGM, chuck that auditor out. Now, many companies went and begged MCA. They fell at the feet of MCA and said, look here, I can't just like that change my auditor. Where will I get an equally good firm? Where will I? It is just not going to happen, sir, like that. So the ministry, as usual, they as if they are thinking for some time. And then they said, okay, we will give you 3 years grace. So every company existing on or before the commencement of the act. So the company should have been existing before the commencement of this act. This act was commenced in 1/4/14. 13 it came. Okay, so before the commencement of the act, who are all existing? Those companies should comply with the provisions within a period which shall not be later than the date of the first AGM of the company held within the period specified in subsection 1 of section 96 after 3 years from the date of commencement of this act. So what they are saying is, the first, if the act had been implemented as it is, 14 AGM, 2014 ka AGM, they should have all, because take for example our firm, in 13 AGM would have been appointed for the 28th time. So definitely we have exceeded. We are now conducting the audits. In between the audit, they cannot take me off. So I will present my audit report in the 14th AGM. Sorry, in the 2000, they will have to appoint somebody else. So such a short notice was given. By the time it was all notified, there is no time to select a new auditor. What to do? So the CII, ASSOCHAM all went, like the Devas go to the Lord Vishnu and fell at the feet and said, please do. They said, chalo, 14, hai na? You don't have to change now. 3 years from the date of commencement of this act, which means what? 15, 16, 17. You do. So 15 March, 15 AGM, 16 AGM, 17. So in 2017, means if your company has completed the 5 years, they are already finished 10 years, then that's on the date of commencement of the act, how many more years they have? 0. Correct. See, on the commencement of the act, how many more years? You add 3. So 15, 16, 17. Sorry. Suppose a company came in, or the auditor was appointed 9 years before. 9 years before. He still has 1 year na. He still has 1 year na. Period of 5 years. If it's a firm, I'm talking continuously only about the firm. Firm for 2 continuous 5 years. 1 5 year over. Now the second 5 year means 4 years over. Now I was appointed 9 years before. Now I got 1 more year. No problem. 18. So I can go until 18. Like that, you do the calculation, boss. Suppose I was appointed 8 years ago. Then 2 more years enough for me. plus another 3 henna grace. Total 5. So 15, 14, 15, 16, 17, 18, 19. 3 years ago. That means what? I have another 2 years in this 5-year term. In another 5 years, the firm can be appointed for another 5 years. So 2 plus 5, 7. Plus already 3 henna grace. Add. So 7 plus 19, 20, 21, 22, 23, 24. So like that you have to count. Okay. So this is the method of counting. So you got 3 grace periods. See, let us say that at the time of commencement, okay, you are appointed before the commencement. Only 1 year. Correct. You are only one. Balance 9 years is there. Plus another 3. Okay. Let us assume we'll count. Sorry, I think we have to count from 14. So 14, 15, 16. 3 years grace. And I've already got 9 years now. I was appointed only 1 year ago. Last year I was appointed. I'm young auditor. Just 1 year I have spent. I've got another 4 years, plus another 5, 9, plus 3. So let us say 14 AGM was the AGM now. So 15, 16, 17, 18, 19. No, they said first AGM commencing now. So you take it that first AGM commencing will be 14. So 14, 15, 16, 3, 9 Hannah. So 3 plus 9, 12 years I can take. So this will be the longest period. The fellow was appointed 1 year before. It's got another 9 plus 3. And that will be the longest period. So 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26. This year, that 1 year wala will have to get over, including the grace. Including the grace 3 years, this year that 1 year wala has to get out. Now, after 26, this provision becomes irrelevant. You understand? Because the next appointment would be after the act was commenced. So there, straight away 5, no grace, nothing. Okay. I have done my best to explain this to you. If you take the institute material, I think the table will be there. In the light of my explanation, you go through the table, you will understand. That is, you see, when he was appointed, what is the balance period in the 10 or 5 years, as the case may be, add 3, count, you will get his balance period. That's all. The 3 years grace period was given for this. That's all. Nothing. There is no rocket science in this computation. It was only meant as a relief to the companies, which need not rush around for immediately replacing a valuable auditor who has been with them for a long time. They were given 3 years to plan and do something about it. Okay, that's all. Nothing else. It came a much needed relief to both the companies as also the auditors. Now see. Plus, suppose what is the area? When I started the practice, I had 0 files. Then I built 600 files. Can I not get 3 more files? Nothing will happen. They are only in trouble because I will not be there to advise them. So what most of the companies who are eligible in my audit, when we informed them, the company secretary will be very eager. He'll go, sir, we have to remove the auditor, sir. Like that, he will tell. Immediately, that fellow will go in shock. He will call me first. Shrikant, what is this company telling that you have to remove you and all? Finish like that. Then can you come and meet me, sir? So I go have a cup of coffee, cashew nuts, and then tell him, sir, law is like that. 3 years, 3 years, first thing he will say of relief. Then what to do? Some other problem, don't worry, we'll solve it and all that. Shrikant, you don't go away, man. You have to be with me. Like that, they will. Why I'm telling this? Not to show off that I'm a big shot. This is the truth for all auditors in India. We are all trusted partners. We are trusted advisors. We hold their hand. We are their compliance partner. We help them to be compliant. That is how we define ourselves as chartered accountants. So they are safe. In fact, many times I tell the client, I built a ring fence around you. Like, Lakshman and Ram were protecting the yajna of the Vishwamitra. We are protecting you. Around you, we will go. We will see to it that so long as you obey what I say, so long as you do what I say, then nobody can come near you. I will protect you. Is the promise that we give as auditors to the auditee. It is a substantial promise. Only in India that emotive promise is given by auditors. That is why in India, we are not just bean counters or accountants. So if you go to US, a CPA is not highly respected. They call them bean counters, accountant. Whereas here in India, we are a highly restricted profession. Like in any town, the respected people, they will have their lawyer, doctor, and audit. Three people will be highly respected people. All when they form trust, temple committee, they will include one auditor there. Because the respect and trust they have in our profession. This is not statutory. This is because of the way we have conducted ourselves, and the way we perform service to the society, and the knowledge that we possess and which we share with them. So no statute can frighten us. No statute gives me the right to do net practice. It is our own knowledge and expertise that is respected by society. We perform a very important role in society. So long as we perform that role sincerely and honestly, society will continue to use us and our services, irrespective of what the statute says. This is my humble view. Of course, as my opinion also. Therefore, instead of arguing, you can value it and either accept it or reject it, as the case may be. But this is my pride of 40 years is I am proud to be a member of the Institute of Chartered Accountants of India. If I do not disgrace the institute will always make me proud of it. It is if I disgrace her, then that is a mistake. I should not disgrace the institute. She will never disgrace me. So, members of a company may resolve to provide that. In the audit firm appointed by them, the auditing partner and his team shall be rotated at such intervals as may be resolved by members. See, this is going beyond the statute. What they are telling was, you members, if you feel in the same firm, the same partner should not be auditing for 2 periods. Then, for the first 5 years, one partner, for the next 5 years, you rotate. But that is the choice of the member. That is why I have highlighted the word may. It is not statutory compulsory. If the members want, they may. Okay. And also they can ask for joint audit. See, this is another thing that I feel is very important. Sir, when one auditor is auditing a company, even with 5-year, 10-year cooling periods, there could be familiarity. Now, if there are 2 auditors, of course, the familiarity will be double, but one fellow will watch the other fellow. So both of them will be worried and they will consult each other and they will say, can we take this risk? 2 people will be better than one. So, and they cannot be threatened by the client also. When 2 auditors are there, both the auditors cannot be threatened. So there might be one strong auditor and maybe one weak auditor. The strong auditor will say, go to hell. So when the strong auditor stands firm, now the weak fellow also will go and hide behind him and say, yes, what you do, you want like that. You do whatever you want to do, you do like that. So joint audits make sense, especially for listed companies, compulsory joint audit from a panel, so that the directors will be worried who is the new auditor, how he will look at my financials. So they will ensure that the financial discipline and the financial records are kept properly, because they know once in 5 years, 2 totally new people are going to come whose appointment cannot be controlled by us. They cannot be my friend. No. Their panel will send me two new faces will come, 2 new firms will come. They will be audited by NFRA. That way, to a great extent, you assure the public about the quality of the financial statements. This is my humble view. Just my humble view. Maybe wrong or you may not agree with it, but my humble view. That way, more opportunity also come to all firms. Instead of a few firms getting all the audits will be fairly distributed so that all firms can gain the experience and be eligible for better audits. This will be more democratic also in terms of professional distribution of professional work. So, we already seen rotation of auditor. Audit committee should recommend the incoming auditor to the board. If no audit committee, the board shall recommend. See, this is one provision I am not able to understand, but I will try to explain. In case of an auditor, the period for which the individual or the firm has held office as audit prior to the commencement of the act shall be taken into account for calculating. This is okay. That is, I already explained now. If you are appointed 3 years before the commencement, balance only 2 plus 5, 7 years is there for the firm. Individual only 2 years. So that 3 years before will be considered for the calculating. Also, an incoming auditor shall not be eligible if such audit has or audit firm is associated with the outgoing audit firm under the same network of audit firms. See, earlier we saw common partner. There could be another situation where there could be a group of firms which are not having common partners, but they may be operating under a single brand of network. There are such networks are there, so that they will be in different cities and they will share work, or they will sort of same network will do it. Suppose they get multi-city work, the network can do the audit in multi, so their opportunities will be more. So they can approach a company and say, look here, we have our offices in 7 cities. We are a network. Of course, each is an individual firm. If so, then once an auditor is outgoing, one of the network firms cannot be appointed in that place. There are 7 firms in the network. One of the firms is now cooling off period. Another firm in the same network cannot come. How do you know whether they are in the same network? At the time of firm registration, you will be asked, are you part of a network? If so, you will have to give network also be registered. So that network you will link so that they will know, oh, you are in that network. Then these 5 firms are also ineligible. Like that. For the purpose of rotation of auditors, a break in the term of for a continuous period of 5 years shall be considered as fulfilling the requirement of rotation. See, I seriously don't understand. See, man was there for 2 to 3 years, 3 years. Then he takes a break for 5 years. After he can come again, go for 10 years. That's what they're trying to say. See, auditor was there for 2 years. Then after 2 years, he took a break for 5 years. Thereafter, he can be appointed for 10 years. 5 years or firm means 10 years. So that you can take a break for continuous 5 years, even though your 5 years is not over. But why would somebody want to do that? See, he is eligible to be for 2 years. Why would he want to go in the middle? I don't understand this part. Okay. But a break will be taken as fulfilling the requirement. Okay. But it should be for a period of 5 years. And that too continues. Okay. Now, if a partner who is in charge of an audit firm and also certifies the financial statements of the company, retires from the said firm and joins another firm. No, there's no common partner. Note it, your honors. In Robert and all that, it was Robert was contemporaneously partner in both. Here, Mr. A retires, resigns from one firm, retires and goes to another firm. Such other firm also will be ineligible. There are 4 partners. One extremely lucrative listed company is there. That work is done by Mr. Partner, Mr. J. Now J feels very unhappy. Hey, what is this? Yeah, my audit no. So he goes to the other partner and says, sorry, boss, I'm taking this file and going. I will join another firm, M and Co, JM and Co, whatever. Oh, is it so? Sorry, Mr. J. If you go from here and go there, that is qualified. So he is thinking that he will plan that I will go from this firm, I will join there. In that firm, I will continue to be. No. I hope you understood. Okay. That also cannot be done. See, of course, I'm just giving this to you in a humorous way. Don't take that making fun of anybody, but the way. Sushmita, yes. Many people don't understand the timeline. How to make you understand? The transitional part, why that there are no 2 timelines. There is a grace period of 3 years. Can you understand the grace period? Not later than the date of first AGM held. So forget the words of that. Don't try to understand the English words of that sentence. They are very confusing. Just look at this. I will show you in one other way. Let us see. Let us see. I will show you in another way. Don't try to confuse yourself. See, I'll put it this way. Act came into existence in 2014. Act was notified in 2000. See, the Act was notified piecemeal. It was an elaborate, long-drawn process. Some sections were notified, some were not notified, like that. So 2014 May, this was notified. So there will be one 2014 AGM now. So according to that, in this 2014 AGM, if suppose, let us say, an auditor, before the commencement of this period, in this period, he has already held office for 10 years. Now, at the time of commencement, how many more years he can be appointed? So it is 2 periods. P is not 2 periods. How many more years he has? If he has already completed 10 years, he is having only 0. So immediately in 2014 AGM, this fellow has to be chucked out and new fellow has to come. So they all went and begged, do something. So the central government said, 3 years we will give you grace. So for this guy, 10-year guy, who is having only 0, he can keep for another 3 years. Meaning 14 means 15, 16, 17. So 17 AGM, he will have to be removed and another firm will be appointed. He will be cooling for 5 years. Clear now? Just confirm to me whether this is clear. 10-year over guy, is it clear? Clear. Now look at another gentleman. Okay. This gentleman will give a better example, not 9. I'll give a better example. This gentleman or this firm, we are only talking about firm, has been appointed 3 years before. So before the commencement, they were appointed, they have already completed 3 years. So you are able to answer correctly for MN and Co. No, Lemon and Co. No, same way. They have completed 3 years. Now balance how many years? Since it's a firm, they appointed, they have another 2 years. Plus another 5 years of second round, second consecutive 5. So totally 2 plus 5, 7. Plus this grace and 3 years. You add. So you can, the formula is balance period plus grace period. It is not 2 periods. It's a consecutive. The calculation is what is your balance period plus grace. For the guy who has already completed 10 years, balance period 0. So only grace period 3 years. But for a guy who has completed 3 years, balance period had 2 plus grace period had 3. I'm sorry. And balance period has 7. 3 means 2 plus 5, 7. Balance period has 7 plus grace period had 3. So he can hold office for another 10 years. So the replacement will happen only after 10 years, is the point. I hope you are able to understand this. Okay. The last guy would be 1-year-old guy. Because if it is less than 1 year, he would fall within that act. Within that, only 5 years plus 5 years, 10 years, that's all. But this guy alone, he will get what happened? That 1 year. So balance period 1 year plus grace 3, totally you get 4 years. This is the last part. So a guy who was appointed 9 years ago, 9 years ago, 9 years ago, he's got 1 year here. Am I correct? So let us say that a guy was appointed 1 year ago. 1 year ago. 2014 at commencement. Now, before that, 1 year before he was appointed. Balance 9 years plus 3 grace. Totally 12. So that fellow who was appointed in 2013, am I correct? So he will hold office for 12. So instead of, so he should have been changed at 2014. So instead, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26. In 26, that fellow should be changed. Are you able to understand? So this grace period provision itself will lose its meaning in this year. So maybe the institute may take that and ask you a question. That is why I'm giving valid inputs. I hope, madam, you are clear now. Can I assume that? Yeah, I know the language is extremely confusing. That is why I'm humbly suggesting ignore the language. You go by how I have explained. Maybe in your notebook, you note down this formula, balance period plus grace period. So in the exam also, if they're asking the question, they will give you something. They will give you date of appointment. If so, then see before 2014. Okay. But they will not ask like that. They will say before the expiry of the term, they have already completed 2 years. How long can they hold office? So you have to say 2 years. Balance period will be 10 minus 2, 8, plus grace 3, totally 11 years. Counting from 2014, you have to count 11 years. 15, 16, 17, 18, 19, 20, 22, 23, 24, 25. So last year AGM, that fellow should have been changed. New auditor should have come. In the cooling period will apply for 5 years. That is all. Okay. So hope in fact, I thank Sushmita ji for asking this question, because I have, to my knowledge, I have explained in Asan and simple English Unfortunately, I cannot do this in Hindi, but simple English, I have tried to explain to you with example how to understand this provision. See, maybe because this is the last year, 27 onwards, this entire grace period thing will become irrelevant because all the appointments will come only after the commencement. So this before commencement provision itself will become irrelevant. But this year it is relevant. There would be guys who are appointed 1 year before the commencement who would be getting out now, whose period will be ending now. Okay. But in our case, most of our audits are 20-year audit, 30-year audit, 10-year audit. So in all the eligible companies, we have been there for ages. So in our case, we had only 3 years, 17, everything gone. Like that. Then again, 18, 19, 20, 21, 22, 23, weak, 22. So 17 now. So 17, they would have removed us now. So 18, 19, 20, 21, 22. 22, they will all come, sir, please, sir, we are appointing you, sir. For 23 March, we were against it. Up to 22, no. They will call us immediately, sir, 5 years over, sir, please come, sir, like that they will call. Then another 10 years will go. We are going now. Also now we will have some of these guys coming out. Okay. Now, so this is the grace period is, that's all. There's nothing, no, as I said, no rocket science. It needs to be, as you rightly say. Yes. Don't say perish. Perish is a very powerful word. Perish means, perish is a very powerful word. Completely, when one civilization is gone or one city is gone, we say perish. Okay. Now we move on to certain ways in which the auditor can be thrown out or removed, or he will lose his office and all that. So we saw qualification, we saw disqualification, we saw appointment, then we saw NFRA's power, then we saw term of office, cooling period, grace period, etc., etc. Now we come to casual vacancy. We already know what is a casual vacancy. That is, due to certain circumstances when the auditor cannot continue. It could be because of death. It could be because of incapacity. Man becomes mad. Man becomes senile. Okay, like that. I'm very happy to inform you. Practicing members of our institute rarely get dementia. Rarely. Because mostly, my father, who is now 90 years, is sitting in a nursing home being taken care under hospital care. But his mind is so active. Latest amendment in law, he will tell. He would have updated himself. Income tax, especially he was a very strong tax practitioner. So he will talk. I think there is one new section on TDS 194M, like that he will tell at 90. Okay. So rarely you will find dementia. But at least in practice, no, because we keep on updating ourselves. Service also, very active mind, intellectually active mind, which is doing creative work and continuously updating itself. No. But routine work, getting caught in the mess, computer-driven, robotized work. However, higher level paid, high paid and mechanical work, there the brain will simply start slowly dying because there is no active usage of the brain's full capacity, then gone. Okay, so casual vacancy can come in government company other than government company. Friends, government company means immediately you should say CAG. Once you say government company, straight away controller and auditor. So the CAG will appoint within 30 days. In case of failure, board of directors should appoint within next 30 days. Okay, what is it now? Okay, now other than government company, this is more important. Okay, in case of casual vacancy, other than resignation, please note it, your honors, other than resignation. So all other casual vacancies, including disqualification, please connect it with disqualification. If the auditor, during the period of his appointment, he incurs any disqualification, then he will vacate office. Do you remember that? Except in one case, that is when relative is obtaining shares, he will be given grace period. 60 days or whatever. I don't remember. Can anybody put it in the box? What is the grace period given to the auditor for rectifying the position? For, his relative is holding more than 1 lakh. Therefore, he will be disqualified now. So the relative is acquiring share now. At that time, he won't be disqualified. He'll get a grace period to regularize the matter. Anybody remembers that period? Wow, Anilji, superb, 60, excellent, 60 days. So, but for that, all other disqualifications, super, Gayatri ji, super. So happy that you are all actively engaged and aware. So, in those cases, immediately there will be a casual vacancy. Death, incapacity, acquisition of any disqualification, or debarring by the institute, any event by which either he is disqualified or he is not qualified. I hope you understand. See, certificate of practice has to be maintained. Membership should be there. If the membership of the institute is lapsed, friend cannot sign. We have to be very, very careful. Okay, our COP and membership is valuable position. Okay, in fact, the certificate of practice is framed and hung in our office. Now we literally that giving me bua. So I cannot. In fact, some clients will come and force me to do something. I'll tell them, boss, look at that certificate of practice. I cannot lose that. Please understand that is what is feeding me. By doing what you are asking, once and for all, you are asking me to get it. No, not possible. Don't. Sorry, the COP. Without that, I cannot do anything. Okay, like that is the point. Sorry. Casual vacancy due to resignation. Other than resignation, board of directors can appoint within 30 days. Normally, only members can appoint. But if there is a casual vacancy, because it has to be completed and etc., for casual vacancy, the board can appoint in 30 days. But where the casual vacancy is due to resignation. We'll be seeing resignation little later. Here, we are talking about a casual vacancy due to resignation, where the auditor resigns. In those cases, the board cannot quietly do this. They have to get the approval of members at a general meeting convened within 3 months of recommendation by board. So, the approval of members is required. That is, the board will appoint, but that will not be permanent. That should be approved by the members at a EGM, convened within 3 months of recommendation by board. So the members have to approve the appointment. So if the auditor is resigning, board cannot quietly bring some other person. They have to go to the members, at which point in time the member will ask, why did he resign? What happened? They may even ask the auditor to come and tell, why did you resign? No, your directors are fraud. I told them what they are doing is wrong. I said that I will qualify. Then they said, if you qualify, we will remove you. Then I said, why you will remove me? I will resign, and I resigned. So who are you to remove me? You cannot remove me, first of all. You have no power to remove me. Only the members can remove me. That there's a separate provision. You come there, you will see. You can't so easily remove me. But you frauds, why I should be associated with you? They will resign now. Like that I told. Oh, is it so? Our directors are fraud like that. I hope you understand the beauty of this provision. No board of directors can afford the auditor to resign. It's a very powerful control. While the NFRA is there, while SEBI, everybody is putting pressure on our profession to, and all that, they have also given us a great support. Our resignation is a signal to the world, especially if it is a listed company and the auditor is resigning. The press wants to know what is that, General Arnab Goswami will want to know, the country will want to know why Charbakam Krishna Natarajan resigned as auditor of that company. That, of course, I cannot do anything confidential. But to the MCA, I will give. You will see that power is there with me. To the government, I'll give the reason. This is what happened. I will qualify. They said they will remove me. Because they threatened me with removal, I said, I will resign myself and go. The way they spoke was like a ruffianish behavior. Therefore, and not at all conducive of professional management. Therefore, my firm has got reputation. So I want to dissociate from this company. Like that, I will give a reply. Okay. So the directors also should be afraid of the auditor. They cannot just like that come and harm us. See, the threat to that, if you do not sign this wrong balance sheet, we will remove you. First of all, that threat itself is a foolish threat because better you don't appoint, I will go. That is easier. But earlier when we went, no, nobody will notice it. Now, a resignation once uploaded to the MCA website, we'll see that along with the form, very powerful. What I put in that ADT form is very, very powerful. I can damn that company and its directors and go while going. Okay, so they have to be very, very careful. Also, the new member who is going to take over, he has to be careful. When I am going after telling there is a problem, if you come and you sign everything is correct, you are in deep trouble. You should also ask the same question. My working paper and your working paper cannot be different. When I am forming an opinion, how you can form a different and correct opinion about them? NFRA will come and ask. Okay. When that man has said he cannot sign, how you are able to sign? What is your audit process? What have you verified? Like that, they will come and ask. So I'm very happy that these provisions are there. They protect us more than anything. Good members, honest members, integrity people, not be worried about NFRA. Frauds, duplicitous auditors, they have to be worried about this. So approval of members required at a general meeting convened within BC. Such auditor to hold office conclusion of next AGM. When at the next AGM, either this gentleman or a new auditor can be appointed for 5 years. Okay, beautiful, beautiful, beautiful. See, some of my statements may seem emotional, but this is not the emotion of negative. This is the emotion of a passionate member who takes pride in being a member of the institute and that too a practicing member. So take it in the right spirit, but without this emotion, we are no better than machines. We are human beings. So without emotion, you are better than machine. Very intelligent questions are coming. One question is, Anil again, Golti Anil is asking, without any reason can we resign? Why not? It is your call. I don't feel like it. I'm taking sannyas and going to Rishikesh. Okay, resign. No need. But there you will give clearly the reason. The personal reason like that we will prove. No problem. Then MCA is not worried. For your own personal reasons you want to resign, who can prevent you? Nobody can prevent an auditor from resigning. But you have to give reason. No grace for any other. Absolutely no grace for any other disqualification. Thank you, Mr. Vijayji, for clarifying the point to me. Yeah. So I have to answer this question. Yeah, you can. See, but why would you resign? Yeah, you're good lucrative audit, everything is going fine. Why are you resigning? But maybe you want to take up employment, your audit is not giving you enough, then what to do? Whatever existing audit, you will resign and go. That's all. Nothing wrong. You can do it for any reasons, you can do it. Okay, now reappointment of retiring auditor. Reappointment of retiring auditor. That is, when the auditor retires at the AGM, when an auditor retires at an AGM, he will, he should be reappointed by the members, sir. But suppose the members don't hold AGM or don't they don't know that the auditor should be reappointed at the AGM. Whatever, there are companies like that, nonsense companies are there. They will do all nonsense. Then the auditor's post cannot be vacant. Auditor's post cannot be vacant. So a retiring auditor may be reappointed at an AGM if he is not disqualified for reappointment. He has not given the company a notice in writing of his unwillingness to be reappointed. And a special resolution has not been passed at that meeting appointing some other auditor or providing expressly that he shall not be reappointed. This we'll be seeing next. Appointing a person other than the retiring auditor or providing expressly that he shall not be reappointed. So, if a special notice is given, this is one case where a special resolution is required, where you're appointing a person other than the retiring auditor at an AGM or expressly resolving that the retiring auditor shall not be reappointed, then he cannot claim automatic reappointment. He cannot be reappointed. So, the time of AGM, he should not be disqualified. He should not have given notice, and a special resolution should not have been passed. That is, it's given negatively. A special resolution has not been passed. That means what? No member has said that a special notice has been given that so-and-so auditor should be removed and somebody else should be appointed. No. Also, no special notice has been removed that whomever you appoint, it's okay, don't reappoint this guy. If such a special resolution was proposed and passed, then this man, the same man cannot be reappointed. Otherwise, a retiring auditor can be reappointed. Be careful. This will be subject to rotation. Are you able to understand? If the company does not have rotation of auditors, then retiring auditor may be reappointed. But if rotation applies to them, then on the expiry of that 5 or 10 years, as the case may be under this provision. Only those cases where there is no rotation provision, this will apply. Where there's a rotation, you have to appoint somebody else. If you don't do that, or you appoint the same guy, you are violating the section for which you will be punished. Okay. Where any AGM, no auditor is appointed or reappointed, the existing auditor shall continue to be the auditor of the company. Automatic reappointment provision is there. But subject again, if rotation is there, then you cannot use this provision to overcome rotation and cooling period. Once the cooling period starts, sorry, no reappointment. You have to go. If the company doesn't appoint some other auditor, then there is a vacancy in the auditor post. There is a violation. It is an offense. Okay, see? Okay, sir? Now, let us see. Moving on. I think Anil would have asked a question. What is that? But while resigning due to some fraud, do we need to go that or complain to problem? When we come to fraud, I will talk to you. When we come to resignation, I will tell you about it. At the time of resignation, I will tell you about it. Yeah, you have to prove. You have to prove. If you are claiming that there is some fraud, you are resigning because of a fraud, with evidence you have to submit to the MCA. Proper authority is MCA, boss. Okay, you go to the UK, definitely. That is called auditing, sir. You cannot make casual accusations, boss. Everything that you say should be supported by evidence. Otherwise, you will be guilty of defamation. Suit will come on you. Be careful. As an auditor, you cannot just like that go and say. Everything that you say should be supported by document. Then you put it together in the form of a report. And then you upload it or send it to the MCA along with your resignation. That top of the company, that is the end of the story for that company. But simply emotion, if you are going to abuse the company and all, no, not allowed. Then you quietly resign and get out. That's better, rather than say that's a fraud. But if you claim that there's a fraud, brother, you have to prove it beyond. It's not a joke. That is called forensic audit. I have done it. I have taken deposition from witnesses. I have put together a whole case and reported to the board, based on which police complaint can be given. Like that we can do. But for that, a lot of hard work is to be done, sir. It is not easy, sir. Just casual talking, anybody can do. Actual ground level work. It's experience based. But be careful. You have to put together evidence, commentary, everything, tape conversations, everything. In fact, when the board of directors took our report, they were shocked. It was an employee level report, which we established and we showed. We can't just like that say there is a fraud like that. No. Everything should be proved. How many auditors may appoint? Sir, one auditor, 2 auditors. If you have a lot of money, 3 auditors. There is no limit on the number of auditors. Okay, the law doesn't prescribe. But seriously, 1 is too many according to many companies. 1 itself is too many. Some companies, due to certain reasons, they might have 2 joint auditors maybe there. For example, banks have 5 central statutory auditors. Yeah, large banks like State Bank of India, they will have 5 central statutory auditors. 5 people will say. Central statutory auditor, 5 people will be there. Okay, so there is no limit on how many auditors may be appointed. But okay. 1 rotation gap, that is after 10 years, then appoint the same auditor. Yeah. No. Sir, firm has completed 10 years. Then cool off period, 5 years. After 5 years, you can appoint the same auditor. No need for 10 years. Okay, I hope you are clear, sir. Cooling off period is 5, not 10. Period of appointment is 10. A firm can be appointed for 2 terms of 5 consecutive years. Okay? I hope that is clear. But cooling period is only 5 years. Okay, please. No, you can ask the question any number of times. And I will stress it. Don't worry. case there is an audit committee, the audit committee will review and then only recommend to the board, even for casual vacancy part. So, removal of auditor. That is before the expiry of term of office. This is, sir, 141 is a weapon. If the company wants to remove us, they have to strictly follow 140 subsection 1, read with rule 7. In fact, see what happens, 600 clients. But sometimes, we get a client whom we honestly believe to be genuine. Then 1 year, 2 years down the line, like the blue jackal in the Panchatan, this jackal's color will keep going and it will be revealed for what it is. Okay, then we also will have to take a call. Though it might be a lucrative audit, we have to take a call. See, if you think money is important, then maybe CA profession is not, that to practice is not a good idea. But if you are philosophical, if you are able to look at this thing, there is one famous shloka for Sri Ramanuja Muni. Ramanuja, they say, Trinaya mene, etat Trinaya mene. Ramanuja looked at worldly pleasures and the money of the world, and he said, Trinaya mene, like grass. He treated it like dried grass. Okay, for him, the wealth of the world, the material comforts and pleasures, Trinaya mene. If you are like that, then you are suitable for profession. Because as a professional, if you are greedy, then you will be misled by circumstances and deep trouble. Whereas, if you are Trinaya mene, what will happen? You are not going to be swayed by money. You will enjoy money, you will earn money, but you are not going to be influenced by money. If so, you can command the client. You can tell the client. You can talk with authority to the client. But if you are going to be dependent on it, if you are going to be greedy for money, then the client can easily tempt you and give you certain small benefits and put your immortal soul in trouble. So if you have such high integrity, only should look at practice. Otherwise, believe me, better off in service. You earn well, no need for any ethical issues because there's nothing there. You are only going to be employee there. Unless you are going to do something highly collusive fraud with the management, nothing can happen to you. Do your job, go home, earn your salary, be happy. Come into practice, come with a lot of integrity and honesty. In those cases, but suppose a person of low morals and integrity has become the auditor and the board wants to remove him, or inefficiency, not completing the audit within the time, delay because of inexperience, whatever, some reasons are there, then they can remove him before the term of office. Of 140 subsection 4 is, at the annual general meeting, you can resolve that the retiring auditor shall not be reappointed, that you will appoint a person other than the retiring auditor, or expressly resolving that the retiring auditor shall not be reappointed. Lastly, where there is a fraud committed by the auditor, collusive fraud, then obviously the board won't remove him. This case of removal will be by the MCA or central government will remove him. Where complaints of fraud is there against the management, collusive fraud for front the auditor, greedy auditor. That is why, even at the cost of irritating you, I wanted to make that point. Okay, you should not have greed for money. But money is important. Earn it well, but never with greed. Money should be, you should not go after it. You keep quiet, it will come to you. The minute you are greedy, then unscrupulous promoters and directors will mislead you. 40 years, the early stages when I was 27, 28, tempted by politicians, tempted by Arak distillers who wanted me, they'll say, whatever fees you want to take, do this for me. No, sir. Your fee, you keep it with you. I don't want it. That money will not be with me. But the money that I earn, again, Shankara says, Yed labate, yel labase, nija karmopatam, vittam tena vinodaya chitta. Whatever is earned by nija karma, which is earned by good ethical approaches. Nija karmopatam, vittam, wealth. Be happy with that. If this attitude you bring to your life, you will be a very successful and happy practitioner. At 60, you can say, I'm happy. But if greed is driving somebody, then somewhere or the other, that person, chartered accountant, not meant as advice, but as a living example of being honest is the best practice. Money will come. Don't think you'll be, because don't assume honest auditors are poor. No. And dishonest auditors are rich. Yes, for a short while, they will appear to be rich. In the long run, they will go to prison. They will lose all the money. More than that, they will lose their name. Okay, which is worst thing in the life. After the name has gone, why live? Can as well die. Okay, so if you think like that, then yes, this is of course unnecessary, not part of the syllabus, but it is part of the larger syllabus of life. If you complete your CA, become an auditor, this is in that syllabus. Okay. Sorry for the emotional words, but don't mistake me. Yeah, good. Because sometimes I find students remember this. Some things that I have told in the class like this. Some student sends a message to me, sir, I cleared CA. I remember what you told in that class like that. This is part of being a teacher and a student. Yeah. Okay. We can't all be mechanical robot teachers, just like that teaching this. That I'm not that type of a teacher. Okay. I'm a human being, a chartered accountant, 40 years experience. And so happens that I'm teaching this subject to you. Okay. Bringing my experience also into this classroom. Okay. Now, mere knowledge, then you can hire an AI tutor. Artificial intelligence can give you tuition. No problem. Okay. Coming to the point. I think possibly another 5 minutes. We will do this and we'll have. So, first of all, if you want to remove auditor before expiry of term, means 5 years before that, you want to remove him, you can. See, it's a double-edged sword. The auditor can resign, means you can also remove him. Be careful. A board meeting has to be held to decide about the removal of auditor appointed under section 139. So first of all, you document why you are removing him, etc. in a board minutes. Based on that, you authorize the director or MD to file an application to the central government. So unilaterally, the board cannot decide and remove me. You, boss, you want to remove me? No problem. Hold a board meeting. You then decide in that board meeting why you are going to remove me. No, Srikanth is a nuisance. He is always asking for documents. He is always saying it should be as per the law. Hey, this is all not acceptable because you document it. That is not enough. Apply to the CG. No, when you go to the CG, you have to tell them clearly why you are going to remove. Okay, of course, one valid reason could be delay. But again, we have to be careful, friends. If there is a delay in audit, it could be due to two reasons. One, inexperience and inefficiency of the auditor. Secondly, and more importantly, it could be non-provision of important audit evidence. We have sent you 3 mails giving clearly what are the details we want. You have not made sufficient compliance. You have not provided it. Now, how can I complete the audit? You tell me. So that that is where documentation will speak for itself. We have sent a mail. We have reminded you. We have reminded you again. We have told you what we want. You have not given a reply. Based on what you submitted, we have raised a query. We have asked, why is this like this? Will this amount to violation of section 185 of the Companies Act? Kindly give us your value. You have not given any reply. How can I complete the audit? So delay could be due to me or you. If the delay is due to me, inefficiency or inexperience, yes, rarely. Sometimes could be valid. Or wanted delay. Some auditors, I don't know, they wantedly irritate the client. I don't know why they do that. After all, an audit can be a painless process. You go there, you ask the question, gives the answer, you are satisfied, sign and come. Why are you, creating such a fuss? I don't know. Because they themselves are afraid. So that fear, they keep on, give this, give that, give this, give that, and they don't conclude. It's okay. If that type of inefficiency is there, then maybe you have a point. Other than that, you cannot go to the central government and say that auditor is asking 2 questions. He's telling me that I have violated FEMA and all. He's saying he will qualify the report. That is his prerogative. If you don't want him to qualify, don't violate the law. Like that, he will tell. So you have to make an application to the central government to be made in ADT 2. The form number, try to remember, it is important from exam point of view. You have to do it within 30 days of passing of the board resolution. Then, thereafter, it is the decision of the central government, which will be the regional director. He will give the approval. Once the approval is given, you can remove. But before that, the auditor would be given a reasonable opportunity of being heard. His point of view will be there now. Audi altram partem. So, just report, yeah, with that opt for everything I'll put. And that is the end of that company's thing. Then the regional director will simply forget auditor removal. Yeah, you come, I want to investigate you first, like that he will say. Forget auditor, Mr. Auditor, you wait. Whether to remove or not, and all, we'll decide later. First, you fellows, you come here. What all he is telling, you show me. And I will go for investigation into your affairs. Like that they will tell. Okay, so it is a dangerous game. Invoking 140 subsection 1 is a dangerous game for the directors. They want to play that game. They should be above reproach, and the auditor should have done something seriously inexperienced or inefficient. Only then they can go under this provision. This cannot be used to threaten an auditor to support them. They can't say, I will go remove you. Go remove, see, go on, go to the central government. I will also come. We'll see who's winning like that. In fact, they will be washing their dirty linen in public if they go there. Rather, they can as well fall at my feet and say, please resign and go. And don't put any of this, put only personal reasons, sir. We will get some other auditor to audit and go. Sometimes, by taking pity on these pathetic creatures, we give resignation. When we see the greed and when we see the pathetic situation in which they are already there, because of greed for material pleasure, the man has sold his soul. So why be even associated with such a sinner? So we will give our resignation and walk out of that thing. Okay. So with all this, if central government says, yes, remove that auditor, then auditor can be removed only by passing a special resolution. Here, special resolution. Where you want to remove him, special resolution. In all cases of removal, appointing somebody else and all, it will be special resolution. But first time appointment, always ordinary resolution. No special resolution. Okay. Auditor to be removed at a general meeting to be held within 60 days of receipt of CG approval. Friends, this is a time-bound procedure. Hold a board meeting. Within 30 days, you go to the central government. Where the central government will take its own sweet time. Finally, central government will pass an order. Based on that order, within 60 days of approval of central government, you have to remove the auditor by passing a special resolution. So you make out a list of things to be done. In the exam, you will have to write. Board meeting, within 30 days, application to central government, ADT 2, approval of central government, auditor will be given an opportunity to represent balance based on which approval of central government received. Within 60 days of receipt of CG approval, remove the auditor by passing a special resolution. That is all. Okay. Mr. Sachidanand was appointed as auditor of Moonshine Limited. The company wanted to remove him before the expiry of his term. And for this purpose, the necessary board resolution was passed on 21/2020. Okay. 21/2020. Then within 30 days, you have to make an application. So necessary application was made in form number ADT2 on 15/2/2020 to the central government. Central government approved the removal on 3/3/2020, which is their prerogative. Thereafter, the company held its general meeting on 15/5/2020 and passed an ordinary resolution for removal of the auditor. Discuss the validity. Do you think it is valid? Correct. Where the management is not ethical, they cannot remove. This 141 is a double-edged sword. They keep repeating. See, what is a double-edged sword? When you take that sword and go to attack a person, that fellow can turn that sword and put it on your neck. The very same that you are using on him, he can turn it and put it on your neck. So double-edged sword, be very careful while playing with it, especially with an expert swordsman. When he is already a good swordsman, you go play with the double-edged sword, he will use that sword to cut your throat, which is what will happen to the directors. Why don't you check out what are all the check boxes? First board meeting done, within 30 days application AD2 done, then approval obtained, then within 60 days, correct? Within 60 days, you have to go. 60 days means how much? 3. So let's count like that. Now 2, 3, 2, 4, 3, 4. Whereas the company held its general meeting on 15/5. So 4, 4, 3, 3 now. So 2, 4, 2. So 2, 5, 60 days expired. Then you are holding on 15/5. Also, you are not passing a special resolution, you are passing a ordinary resolution. So is it valid? Yeah. Not only 60 days passed, it is an ordinary resolution. Please note, double problem. Okay. OR cannot be passed more than 60 days. Okay, to both check boxes. So remember these check boxes easily, then you can read. Okay. We overstayed my welcome. Therefore, let me stop. And in the next, inshallah, we'll complete this topic. And I will also upload this material, inshallah, by tomorrow. Okay. Thank you. Wish you all the great, have a great evening ahead. Bye. Sir, class over, sir. Sir, class, sir.
Okay, sir. Thank you, sir.
Thank you.